Hello everyone, I am Dr. Rajesh Kumar Srivastava, Assistant Professor in BBDU University, Lucknow. Today I am going to present my presentation based on funds flow statement. First of all, we will discuss about the meaning of funds flow statement. There are two words, funds and flow. Fund means working capital. If current assets of a company are more than its current liabilities, it is called working capital. And thus, working capital's other name is fund. That is, fund equal to working capital equal to current assets minus current liability. Now we will discuss about the meaning of flow. Flow means changes. That is, funds flow statement means changes in working capital. This change may be either inflow or outflow of funds. For example, fixed assets changes into current assets or current assets changes into fixed assets. Fixed liability changes into current liability or current liability changes into fixed liability. When a transaction involves one current account and one non-current account, then there is a flow of funds. Now we will discuss about the concept of funds flow statement. Actually, funds flow statement is a method by which we study changes in financial position of a business enterprise between beginning and ending financial statement dates. It is a statement showing sources and usage of funds for a period of time. There is a direct relation between current assets and working capital. When current assets increases, working capital also increases. When current assets decreases, working capital also decreases. There is an inverse relationship between current liabilities and working capital. When current liabilities increases, working capital decreases. When current liabilities decreases, working capital increases. Increase in working capital is application or use of funds, whereas decrease in working capital is a source of fund. Now we will discuss steps required for preparing funds flow statement. First step is to prepare a statement of changes in working capital. It is necessary to make a statement of changes of working capital because net increase in working capital is use of fund and net decrease in working capital is source of fund. We take the balance sheet on two different dates. Then we separate current assets and current liabilities. Now we will describe the examples of current assets: cash in hand, cash at bank, bills receivable, stock, debtors, prepaid expenses, accrued expenses, and marketable securities. Now we will describe the examples of current liabilities, which are bills payable, creditors, outstanding expenses, advance incomes. Now we will show the statement of changes in working capital. For any balance sheet of two different dates, we describe about the current assets. What is increasing in current assets or decreasing in current assets, and its impact on working capital we will describe. Similarly, we will select the current liabilities and the contents of current liabilities increases or decreases. What is its impact on working capital we will write here, whether it is increasing or Now we will discuss about how to ascertain the funds from operations. First of all, we will try to understand the meaning of funds from operations. Operation means business activity and funds from operation means profit from business activity. Funds from operation is required for preparation of funds flow statement as sources of funds. It can be used as an application of funds when there is a negative figure of funds from operations. How to compute the funds from operation? First of all, we will take the figure of net profit after tax for the year. Then we add up all non-current and non-operating expenses, for example, depreciation, loss on sale of fixed assets, interest on debentures, goodwill written off, provision for tax, proposed dividend, interim dividend, and we deduct all non-current and non-operating incomes from this figure, like interest on investments, dividend received, profit on sale of fixed assets, interest on bank deposits, refund of tax, other then only we can arrive on the figure net funds from. Now we will describe how to prepare the funds flow statement. Actually, funds flow statement comprises of sources of funds and application of funds. Sources of funds and application of funds means sources means from where the funds is generating. Application of funds means where it is being utilized. Sources of funds comprises issue of share capital, issue of debentures, loan from financial institutions, sale of non-current assets and investments, and lastly funds from operations. Application of funds includes redemption of preference shares, redemption of debentures, repayment of loans, purchase of non-current assets, loss from operations, payment of dividend tax, etc. Thus we achieve total application. Now we will describe the importance of funds flow statement. The importance of funds flow statements are: first, financial situation. The reasons for a company's financial position change are not explained by the profit and loss statement or balance sheet. The statement will provide details regarding the sources of cash and application of funds. Second point is company's analysis. The funds flow statement will provide a clear picture of the source and use of funds. Third one, it is useful for the management. This statement of financial flows is a tool for management to determine its course of action and also plays an administrative control role. Next point is changes in assets and liabilities. Between two balance sheet dates, the statement shows the reason for changes in assets and liabilities. Therefore, in-depth analysis of balance sheet can be performed. Now the fifth point is credit worthiness. This is the most important thing when we want to achieve loan from any financial institutions, the financial institutions first of all wants to know the funds flow statement. Therefore, it acts as credit worthiness. This company statement is used by lending institutions or financial institutions to assess its credit worthiness. The statements are compared against each other over several years to approve the loan. As a result, the statement shows the company's creditability as a fund manager. Now we will describe about the limitations of funds flow statement. The statement has following limitations. First point is this statement is focused only on movement of funds. That is, funds flow statement tells about the changes in funds. Other parameters included in the balance sheets, profit and loss accounts are not considered here. It is therefore necessary to analyze it in conjunction with the balance sheet and the profit and loss account. Second limitation, major limitation is the funds flow statement does not show the company's cash position. For now, thanks.